Hello there everybody, good morning and welcome back to HowToTrade.com and welcome back to another one of our live streams here in the trading room this morning across our YouTube, our Facebook, LinkedIn and our X channels. I hope everyone has had a good trading week so far. It's been interesting, that's for sure. Did you see that move in the stock market overnight? Nasdaq's up 1.2% already overnight in Asia, which is slightly strange. I don't normally see price action like that in the US market in the Asia session, which is fascinating. I'm expecting today to be probably the most volatile day of the week. If you're looking for the week where we're going to see the biggest moves, I think today could be the day, and I'll explain that as well in just a second. As you can see, I have titled the stream as a live trading Q&A. We done this a couple of weeks ago, which seemed to go down quite well. So really the idea of the stream is to just have an open dialogue, an open discussion. So if there's any questions that trading related that anyone has on anything at all, then feel free to drop them in either the channels, like the chat room channels, or you can message me privately in the trading room as well, and I'll answer those questions for you. Other than that, there is still a bit to talk about, so if no one has any questions, then that's fine. We'll just carry on with the normal stream as such. But if anyone does have any concept, any market, any psychology problem that they're having, then feel free to let me know. Hello to you, Martin. Good to see you. Zach and Dillaby, good to see you all, and thank you very much for tuning in today. So, overnight last night, I'm not sure if you saw this, but we had, not overnight last night, sorry, this morning, we had quite a decent, move in the Swiss franc, and that was because the Swiss National Bank eased their monetary policy and lowered their interest rates to 1% from 1.25%. I don't know if you see this, but when the Swiss National Bank deliver their monetary policy statement, they give it to you in almost like a PDF, so you can actually download that. It's easy to download. I just went onto here and then went down to the policy rate here, and then you can download that by clicking full story. If anyone wants access to that, then please let me know. I'm just going to do a little bit of a read of that just to see what happened, because when I was looking at the Swiss franc today, you can see there has been some volatility in it, some strength really against the dollar, but against everything else, it weakened quite significantly off the back of it. You can actually see, if I click on this, you can see the spike. So initially we had Swiss franc strength off the back of the release. We've sort of given up all those gains since, and I'm not quite sure why. I'm just reading it now. I think it's something to do with this, where it says the S&B also remains willing to be active in the foreign exchange market as necessary, which basically means they're not going to be afraid to intervene in the market. So that's probably why you got that spike, quite a significant spike. But you can have a read of that. It's 3 pages long. I don't need to go through it today. But inflation has fallen quite dramatically in Switzerland. You can see how low their rates are relative to like pretty much all the other major economies. So they've done a good job in getting inflation down, which is decent. Now, that's for me was just a little bit of a warm up. As you can see, that's our high impact news event of the day. We've also got, and I want to put a little bit of attention on this, is the GDP, the gross domestic product annualized. That could cause some movement in the US markets later on. That's pretty much because we're going to find out really what the annualized economic growth figure is in the US. And obviously now the narrative is that the Federal Reserve can achieve a soft landing. Well, hopefully, if that's the case, GDP, all these sort of economic figures need to remain, above forecast or at forecast. If we see GDP maybe down at 2.8, 2.7% today, then we could see a continuation in the sell-off of the US dollar, and we could see a sell-off in the stock market as well. Difficult, I know, because the stock market's been rallying like crazy at the moment. But anything 3% or above, I think will sort of keep the fire burning. That's that the Federal Reserve are going to, get that soft landing, which is what the markets are sort of looking for at the moment. And then also, if you look here as well, I know I don't normally go through medium impact news, but we have got, I think it's 10 or something, Federal Reserve members speaking at various different things. I can't remember what the actual conference is called. 2 seconds, what's it called? So it looks like it's all pre-recorded, but we're hearing from all the FOMC members today, including, obviously, Powell himself, which is obviously the high impact one. So I'm actually expecting, and look when Powell talks 10 minutes before that US equity open. So I imagine that later on this afternoon, around that US equity open, it could be quite volatile around that time. So just be careful if you're trading around that time. It's 20 past 2 in the afternoon for me, and you've also got the first one starts talking at 10 past, quarter past, 25 past, and then some more later on this evening and this afternoon as well. So I'm actually expecting it to be a really busy US session. Hopefully, fingers crossed, we can get some good market moves. Good morning to you, Matthew. Good to see you, Martin174. What are your thoughts on the AD USD trade from yesterday? I think it was a little bit unlucky, really. Let's have a look. You can actually see, rather frustratingly, what happened yesterday is that, it does happen. We got our entry here. with a stop loss at our EMA 36, and you can see that we would have been stopped out, and now about hovering around entry, and probably quite frustratingly, it's going to keep going. no, but it's the rules of the strategy. There's someone in the room. Obviously, I won't say who their name is, but they've been trialing by a method where they put their stop loss sort of 10 pips below the EMA 36, and I'm waiting to hear back from this person to see how successful that is, because there's been a few times where I've noticed that we've been stopped out of the trade, it just wicks below, almost like a liquidity sweep below the EMA 36, and then the market actually starts to trend in the original direction. So yeah, took a loss on that one. It's all good. It's not the end of the world. I would also say that hopefully you managed to see this. Yesterday, if we look at the NASDAQ, I know we don't necessarily use the NASDAQ for the trend rider, but yesterday we were hovering around it. You can see, I think when I came on the stream, yeah, it was here. If you managed to catch on to that one, I don't know if anyone did, but I did point it out on the stream. Currently trading at 2.76 to 1 with absolutely zero drawdown pretty much. So that was a really nice potential trend ride opportunity on the NASDAQ. Again, it's not one that Mario Singh suggests that you use, but it does work. It definitely does work. Who else have we got? Hello, DB. The question I have is concerning the HowToTrade website. I can't see Shane on the chat. I can only see your chat. Is there any way that can be corrected? That's odd. So you can't see Shane's emblem in the top left-hand corner, because you should be able to see where, like, the coaches, the two coaches, and then obviously you can see when I'm online. But you've got Shane's picture there, and if you want to message him, you just click on that and then you click message. Can you not see that? Hello to you, Adolphus, by the way. Good to see you. Thank you for tuning in today. Good morning to you, Machine X. Good to see you. Hope you're doing well. Do you have any questions on the markets that you'd like me to discuss today? This is a live trading Q&A. So any questions that anyone has on the markets, drop them in the chat room or message me privately, and let me know what you want me to talk about, basically, because it's a bit of an open book today. Let me know, Dillaby, if you can see that. Yeah, you should be able to, but anyway, yeah, have a look. Looking at the NASDAQ now, you can see we are, in my opinion, gunning really for these all-time highs. All the time we've got this soft landing narrative in play. What I'm seeing is a market which is having an expansive move higher, and then a period of consolidation. Okay, and then another expansive leg higher, and then another period of consolidation, and now we've just had another leg higher. So what I'm now looking for, rinse and repeat. My key level was hit at 2250. Get rid of that. We've now broken above 20,000. That's a really clean bullish move. It's almost a little bit too easy to trade this market at the moment. That's what worries me. I'm looking for now another consolidation period. Call it a flag if you want. It might look like that. And then I'm going to hopefully catch on to that next wave higher. If we do get soft land in Ireland and all that sort of stuff, there's no reason why the NASDAQ can't hit 21,000. I know it's quite a strong bullish view, but I haven't seen enough evidence yet to suggest that we're going to see a sell-off in the stock market. Now, historically, and let me get this up for you. I want to show you something. Hello to you, Nicholas. Yeah, no problem. I'll have a look at what and explain what a fair value gap is, and also Rania will look at USD versus the Japanese yen for you. No problem at all. Oh, but a few more. a few more questions coming through. Okay, it's brilliant. I won't take long. Basically, I've just released an article here. It's quite a long article, and it's about what the Fed cuts and how they could impact the markets. So I do suggest that you go and check that one out. I'm going to drop the link in the chat now. The reason is because I give quite a detailed view on, first of all, if you're confused about what falling interest rates are. Second of all, do rate cuts mean bullish stocks? If you look at this little picture here, you can see that the biggest market crashes have come after the Federal Reserve have pivoted from higher interest rate policy to cutting rates. That's when the biggest market crashes have occurred. But there's a difference this time, and that's that the Fed is easing policy not because the economy is unhealthy, because it's actually healthy, that's the evidence we're seeing at the moment. And that's why we're seeing, even though the Federal Reserve have cut, we're not seeing that sell-off in the stock market just yet, because the data that we've seen is not weak enough to suggest that we're going into some sort of economic slowdown or economic recession. So that's really important. That's why I'm putting a lot of emphasis on that economic data coming out. Right, let's have a look first. Right, fair value gap, right. Nicholas, in our trading room, and this is completely free, if you go over to course number 6, and you go to module number 3, we have a lesson, or it's only 10 minutes long. It's a video on exactly what fair value gaps are. I'd recommend that you come and check it out to understand what it's all about. However, I can show you what it's all about as well. A fair value gap is essentially where, let me get rid of these drawings. A fair value gap is essentially where the market makes an impulsive move and we get a situation where there's only buyers present or only sellers present. So basically it's just like a gap in the market. Right? When we get that expansive move, let me show you it in a clearer way. Let's say the market goes like that, or the market's trending like this, right? And then suddenly we get that. In that move, normally we have a fair value gap, which essentially is where a situation where there's an imbalance of buyers and sellers. So in this case, it's there's an imbalance of buyers over sellers, but you can get a situation where the market's moving, lower, like this, say, and then suddenly we get that sharp move to the downside and we have an imbalance of sellers over buyers, and that creates a fair value gap. Let me delete that. There is an indicator. If you're on TradingView, Nicholas, and you click on indicators, type in fair value gap, and this one here by Lux Algo will mark the fair value gaps for you, free of charge. And you can go through and basically just study exactly what I'm talking about. So as you can see, look, in this situation here, you draw the box from wick to wick. So you look at the left-hand candle and the right-hand candle, and you draw from the wick to the wick. Same here. I would actually draw it like this, personally. Again, another one in there, and you can see that sometimes they act as really nice support areas. You can see that in this example, it acted as a really good support area. Would highly recommend you check out that video in the academy, because it will be a bit more of a detailed explanation, should we say. Who else have we got? Rania wanted me to check dollar yen. I think someone else did as well. Yes, Zach. Yeah, I was quite surprised at what happened on dollar yen, to be fair. You can see basically what I had marked. I had it marked this morning, but I did delete it. I was so happy with this rejection down here. And I did, in the end, actually manage to get some profit out of those 3 rejections from the 61.8. But I did hold on to all the trades because I wanted to see dollar yen make a move like so. However, as you can see, it didn't do that, and it's now actually invalidated this 61.8. And as per my rules, that means that dollar yen's no longer in an area of interest for me. However, there is a key resistance level coming up, which we could look to potentially play. And that's basically, Zach, this order block or supply zone which sits here. If we get a situation where dollar yen comes up, trades above and closes above this supply zone, then I'm probably going to have to change my my view on dollar yen from bearish to bullish, because I think that will constitute a strong sign of a bullish reversal here. I'm still bearish on dollar yen. Took a little bit of profit there, but I'm sitting out of this one. I want to see how we react from this supply zone. What I want to see is dollar yen get up to 155.766, and to be fair, that could actually almost be a good short opportunity. There is still a divergence in policies. However, we do have a dollar which is extremely oversold, of course, so this bounce isn't too much of a surprise, but we could look to play something like that, or we look for a lower time frame reaction. You know, we've actually got a refined area up here, and that would be that's a real discounted area, right? Because a real premium area to sell from, because that's right at the top of that fib. If we break above that, then we've sort of gonna have to draw that new fib, which will be a bullish one, funnily enough. So yeah, really important test coming up over the next couple of days, should we say. So hopefully that helps you, clone, as well. Well, you're probably not going to be happy with what I'm saying, but yeah, now we've broken above here, new high. It's not saying that we can't fall from here, but I always look for my areas, and my area is now at 145.8, or this refined area at 146.6. If we break both of them, then we can say we're turning bullish. Marv 1984, hello to you, good morning. Do you ever trade divergences on the higher time frames? If so, what kind of trades do you look for, please? I've heard numerous traders say they are useful. Yeah, definitely. You can actually see... Oh, sorry. What kind of trades do I look for? Marv, if you're going to use divergence, and I'm going to assume you understand what divergence is, because why you've asked it, use it as a initial sign. Don't use it as a trading strategy as such, because it's quite difficult to pinpoint your entry. Use it as your first step of your analysis. So your first confluence will be, is there bullish or bearish divergence? This is going to be a trend reversal, strategy that you're looking for. You can actually see here that if we look at dollar yen, for example, there was signs, really strong signs, of as 4-hour divergence, and also look at the daily divergence. Really, really clean. Now, how would we enter that? Because obviously you're not just going to just buy the bottom and just sit and pray. You'd have to go onto the lower time frames and look for that's clean, isn't it? Wow. Wait for a break of structure, which you can see we got here, and then try and get in at the retest, and maybe down here or something. Because that would have been our order block. So you use the high time frame divergence, then you move down onto like an hourly time frame, and then you can pinpoint your entry with your stop loss sort of at the low of where that divergence is. So yeah, that's the sort of thing that I do when I use divergence. So I use the high time frame divergence, then I move down onto the 4 hour, 1 hour, 5 minute, 15 minute, and I wait for a change of structure, an actual reaction, and then I look to trade from FVGs, fair value gaps, and order blocks. Always, always, always. That's where I enter, no matter what the strategy, So yeah, no reason why you can't do that. Matthew, I thought the trend rider is just for USD pairs. Then how should we set? Yeah, no, I agree. Yeah, that was purely just for because I was just playing around with it. Really, the strategy is for dollar pairs. I know people out there are testing it on gold, etc. But it is primarily for dollar pairs. You are right, and you're right. It'd be difficult to know what sort of stop loss. It'd be 30 points maybe. You have to test it. So I was just doing a little bit of forward testing now. I didn't actually place that trade myself. No worries, Zach. I had a similar plan lined up. Thanks to Smart Money Concepts, I pulled the profit out of the USD yen as well before it reversed. Good man. That's pretty much what I did as well. I took most of it off and I had the rest at entry. Got stopped out 3 times at entry. Good stuff, Marv. Yeah, chart divergences. You don't just have to use the RSI. You can use the MACD. What you could do is you could use more than one. This one's a good one as well, the tricks. Oh, it doesn't let me do it. I've got too many indicators. But you can use the MACD and the RSI and only trade when they're both showing divergence. So in this situation, were they both showing divergence? Yeah, look at that. So that gives you a sort of an extra bit of confluence there because you've got both of them showing divergence. Then you move on to the lower time frames. That's like your first step, should we say. What else have we got here? Differences between fair value gap, order block, supply and demand. I'll be completely honest, Machine X. I think I don't really understand why it's been sort of learnt or taught that supply and demand zones and order blocks, to me, they're the same thing. You know, you're looking at the footprint or you're looking at the start of the move before an impulsive move to the up or down side. It's exactly the same thing. So I know that sometimes I call it supply and demand zone, sometimes I call it order blocks. That's because I don't want people to get confused, so I just say both. So order block or supply, bearish order block or supply zone, bullish order block or demand zone. Liquidity grabs, that's also in the academy as well. That's just essentially where the market fakes out. So we're looking for the market to so let's try and find a situation where that happened. Yeah, like here, where the market threatens to close below a low or above a high, but then we actually get a wick, and you can see that wick. That's our liquidity sweep. We've also got a lesson on that in the academy as well. Here, the power of liquidity, and you're in the trading room, Machine X. I recommend that you check that one out. Not sure what you mean by how to identify bias in both kind of currencies without looking at the chart, just by looking at the numbers. I'm not sure what you mean by that. More questions on there, Frederick. Based on your experience, what is the best time frame to trade Ichimoku? I mean, I'm always going to say the daily time frame, to be honest with you, because it's my favorite time frame. It doesn't matter what concept you use in trading. It's always going to be probably more reliable and more steady the higher the time frame you go, and you're going to get a lot more excitement, a lot more losses, and a lot probably bigger wins the lower the time frame you go. So my answer to that question is, based on my experience, I like the daily time frame and I like the 4-hour time frame. So that's what I would use the Ichimoku on primarily. Yes, gaming. We did gaming chronicler. We did go through AU and GU. AU we took a loss on. I'd only ever exposed to one pair at a time, so I wouldn't have placed GU and AU for that exact reason. And I did say that yesterday, because if the dollar goes against us, then you're going to get stopped out of both. So it does say that in the strategy book as well, to make sure you always only expose yourself to one currency at a time. Mehdi, hello. How does the Lebanon war affect the market? Oh, well, it's going to affect oil prices, right? Any sign of peace will help probably see oil prices lower as a result of that. But also just as a whole, geopolitical conflict isn't good for risk sentiment. What I've noticed over the last few years is that the Russia-Ukraine war, Middle East war, everything that's going on in Lebanon, the markets aren't reacting to it at all. So I would suggest, or normally I would say that, yeah, there should be an effect because geopolitical warfare isn't good for stock markets. But because the West aren't involved, and until such point where the West do get more involved than they are, I know they're like supplying weapons and all that sort of stuff, but until they actually escalate it from where it is right now, I don't think it will have much impact on the markets. If an index goes up and the index is stronger on the base currency, are the chances the quote is lower so we sell, or are we biased? Yes, that is right. Yeah, I think that's right. Still don't really understand the question. I still don't really understand the question. Let me come back to you on that one because maybe I'm just being brain dead this morning, but I'm trying to wrap my head around. I've done a lot of talking today. Let me get back to you on that one. Okay, good stuff. Right, I don't think there's any more questions coming through. That was a really, really good session. Thank you very much for those who came and asked questions. I'll do this stream every week if people want, because then at least I know what it is you want answers to, which helps. It is going to be a busy session. I'm expecting quite a lot of moves in the US session today. So make sure you are prepared for that because it's going to be a lot of speech, a lot of talk. And hopefully when I come on tomorrow morning, I'll try and break that all down for you in terms of what were the important things that were said, if it's going to move the needle in any way. Basically what we're looking for is, are we going to get any more hints that there's bigger hikes and more hikes coming quickly? That's what we need to see. If not, expect a dollar rally. If it is, then if we do expect, if the language is more cuts and they're coming soon, then expect that dollar continuation, sell into the downside, and obviously more stock market buying probably. How many trades is over trading? That depends on the time frame you trade. Oh, good work, did we? I'm glad you can see that now. How many trades is over trading? Difficult one. Depends on the strategy really, because for me that looks probably something like, if I'm doing like 2 trades a day, it's too much really. But if you're a 1 minute or 5 minute scalper, you could have 10 or 20 trades a day. It really does depend. What you have to do is break down your strategy and tell you realistically, before I do anything, how many trades should I expect to have per week? And if you do a week of trading and you're doing triple that, then you're over trading, right? That's what we need to focus on. Okay, good stuff, everybody. Thank you very much for your questions today. I will end the stream there then. As I said, be prepared for the Federal Reserve members, the FOMC members speaking later on. I'll be active in the trading room if anyone does need me throughout the day. And until then,